How's it going, guys? This is Forensic Forex with Yanta, and I'm back with another video. This is your daily update on US dollar versus the Swiss franc. As we can see, it looks like we're pending a higher swing low here. And you guys noticed in the last couple of videos, my narrative and my sentiment is bullish. I'm a buyer. I want to see dollar go up in value and Swiss franc and any other inversely correlated pairs to go down in value. Right now, we can see we're in a range, almost like a bull flag, right? A retail bull flag. Up, and then we get this flag here. But this is not how we like to explain it, right? We're looking at the swing points, the inefficiencies, and where price is most likely going to draw towards. In order to get a full picture understanding of the sentiment, we need to compare the other majors. So we look at the DXY. So right now, if we could get Monday, right, my reasoning on wanting to continue to go long, we just have a higher swing low. I am cautious. I've been kind of reminding you guys that we do have this fair value gap, and the dollar looks just like this, but it actually traded into the fair value gap. Now, there's some people that might have commented and said that this Monday or any of these days in this week rated Friday's low based on another broker. Now, there might be some discrepancies amongst the brokers and how they're providing and showing the liquidity feed to us, but we can see it's still inside this range based on Oanda. It's inside the range on Friday's high and Friday's low. So that was the previous week. That was non-farm payroll, that large drop down. Most of that came from that. So we're still trading within that range. Even if it's another broker, we all know we're still range bound. It's in a small cycle. So this is where we need to be very crucial in paying attention, because the large cycle will start to kick in when we start to see evidence that the market is moving sideways. So they're building in market sentiment, buy stop orders, and sell stop orders are just piling up. Eventually one side's going to give and it's going to fly, unless it's a false break. We could get something along the lines like this, down and then back up. We could see that. That's a possibility, and it'll make another swing point and it pushes back up here. Or we're incorrect. It takes out the swing low. This swing high is protected now, and it continues to sell off. There's an inefficiency, right? Price trades into the inefficiency and sells off again, creates a lower swing high. We will get to that if that comes to it. For right now, I'm still in that bullish stance because we haven't broken a swing low yet. We kept this intact and we kept this intact. So for me to switch gears or switch hats to being a seller, I need to see a swing low broken, and then after that, we need to see a lower swing high, because we're still following this. It's either going to be one or two. It's going to be a false break or a bullish trend, or vice versa. It's going to be a false break or a bearish trend. So what I mean by that is it's going to be either a false break going back into that, right? Or it's going to be price running up and then selling back down. We can see those scenarios too. Again, the macros, the National Bank, the National Swiss Bank has a rate of 0%. So based on macros and interest rate differentials, the Feds have a larger yield. So we like that. That's definitely in our favor if we're going to be wanting to have a strong dollar. Let's take a look at the DXY. So let's come over here, and we can see we created a swing low. Now I want to see that third candle in this swing low, if it's rated via Monday or Tuesday. I really don't want the low to be taken out. In those swing formations, that last candle that's forming the swing, I really want that high or low. And based on this, since it's a swing low, I want this low to be intact. I don't want that next candle to rate it and then go up. Because if that's the case, then we're going to make maybe another lower swing low, and then we could probably start seeing ourselves go up. But since the formation, right, we're trying to get a jump on the market a little bit, a little edge. If we could see this candle's high rated first, then Tuesday, let's say if it's going in this sequence, it's not going to be perfect like this, but let's say Monday runs Friday's high. That means this candle's high up here, we want to have a high probability to this high going into the next day. So we'll find any buying scenarios, buying below midnight, buying below 2 a.m., buying below 7 a.m., buying below 8 p.m. We want to see price going into that direction. And that's what we would suspect as a high probability rate. We do have a swing high here too. So there's that range there, but that busy. We got a busy up and a busy down. Busy SIBI, right? We got a BPR, balanced price range. Is price going to hold price here? I'm not sure. This is all speculation. Let's look at one more pair. Let's look at something inversely correlated. So GU. So GU's in a range right now. GU, from this high to this low, it's still in the range. It didn't make significant highs or significant lows. So this is that low, and then that's that swing high up here. It's inside this range. When we cut that range in half, we can see it's at equilibrium and higher, most likely premium. We're above in a premium currently. It's expensive. We just traded into a PDRA too. We got that fair value gap, up candles, right? Bearish order block theory. Could we see a smash candle, Larry Williams, right? A close. This candle closes above several highs. Let's just get rid of all this stuff right now. Here and here. This candle closes above several highs. And the closes of these candles are getting closer to the actual high of the day. So that could be signs of the market probably exhausting, right? Or wanting to squeeze as much out of the market before they start turning around and fading on buyers. Because the buyers are having a sweet time. We know that there's going to be some type of retracement due, whether it's a correction of 2 days and going back up, or it's a correction that turns into a new trend. All right. Yes, we broke a swing high formation. We would have to see, is a higher swing low going to form to continue this bullish trend? That's the only way I'm confident enough to say, okay, let's start switching gears and saying we're buyers. I'm not going to jump into GU right now and say, oh, we're outright going to be a buyer. Not yet. Okay. We need things to sequentially play in line. AU, similar idea that looks like GU and inverse to DXY. So the DXY was coming down into a fair value gap. AU is going up into a fair value gap, just like GU. So could this be a lower swing high based on this one here? It is higher than this one. This one's higher. That's a swing 1, 2, 3. This one's a little higher. It's a higher swing high here. Correct. But is this going to be held and respected to create a price action to go lower? We don't know, but we're going to keep following suit. Let's just go back and recap. I'm going to end it off here. Keep it short and simple. Sometimes over analyzing the market can get you tripped up. So again, I want to see if price is going to have the capacity to push up and take out Monday's high in this swing formation. I would prefer, right, this Friday high. I would prefer this Friday's low not to be taken out, which is a part of that swing low. I don't want it to. It can, and if it does, then I think we will quickly come down here. It could happen very fast because we're in a small range and we need a breakout. Eventually, market needs to start gyrating and printing those large candles again. So it's very quiet. This is the most important part here. You're stalking a setup now. The market is very quiet. People are uninterested. And then when it kicks into gear, everybody's like, oh, I missed the boat. Well, you should have been there. Everybody was lining up. They're getting ready. And you want to be on that right side. And even if we're on the wrong side, let's end it like this. Even if we're on the wrong side, you still are in control of how much risk you take. Regardless of what my bias is here, right? You could totally disagree. Comment, hey, Deontay, I disagree. That's cool because you will see publicly, I would say, dang, I got it wrong. But let's continue moving forward. We're not going to get stuck on the idea of us getting it wrong because we know eventually we can find the trend. Hopefully you found this insightful. Peace.